2020, a year to remember. Markets were up, crashing down, and they've roared back to life. Are you a bull or a bear for 2021?
I'll say it again, we're actually bullish. We tend to be quite conservative, but we think there's valuation support across different sectors in the market. There is some overhype and there is some bubble activity, particularly in tech, but there's other sectors where there's heaps of valuation support, there's heaps of opportunity. We're talking a smorgasbord in small cap and micro cap at the moment. So we're finding a lot of opportunity out there. You're seeing M&A activity, you're seeing all the construct of actually making good money in small cap for the next couple of years.
Okay, so everyone's at the smorgasbord.
Yeah.
Where have they gone too hard?
Oh, everyone's run into tech and they've all run into the COVID beneficiaries. So it's a very crowded trade in those two parts of the market and they're not mutually exclusive. And that's the places we're avoiding. We're finding good value in sort of the older world, the more traditional type industrial businesses. We own some companies that are quite cyclical, exposed to housing or materials, etc. And we're seeing good upside in those sectors.
Okay. Everyone's got a few dogs in the portfolio, a few mistakes. What's the clanger from 2020? What went wrong and what did you learn?
Everything was a clanger earlier in the year for us and it looked like it was doomsday, it was Armageddon for us. But what we've seen in the last 3 or 4 months is everything that we owned has done really well. We saw it in the August reporting period. We were like, all our companies which were pretty depressed in terms of valuation all reported fantastic numbers and you've seen the actual share prices move considerably after that reporting season. And then we've seen further activity since then with merger and acquisition type activity. There's a lot of that going on at the moment. You know, capital is cheap, companies are cheap, economic conditions are actually pretty good and we think are only going to get better.
There was nothing that gave you, nothing that carded you out?
Oh, look, we've owned Essentia for a long time. It's been a difficult position for us. You know, the industry has been challenging with a couple of irrational competitors that continue to burn money. That, I suppose, industry construct has made it a difficult space for a company that's profitable. And it's that disruption, or those companies that are willing to lose market share, that make it difficult for an incumbent. We think at some point those competitors will run out of money and therefore Essentia will be in a better position. But for the last few years, it's been tough.
And what's the lesson?
The lesson learnt there is beware of, I suppose, incumbents that are being attacked by companies that don't have a return focus, that are happy to lose money. And that's, unfortunately, that's happening across the market. It's not just isolated to media monitoring. You've got that in other parts of the market and it makes it challenging. It makes it challenging for investing, basically, when the cost of capital is just so low that companies are willing to burn money to get to a certain share. It's a difficult equation.
Okay. We all have an eye for something that we can't own right now. What's the stock out there in the market that you'd love to own in a sell-off, but it's too expensive right now?
Love to own in a sell-off. That is a hard question. Obviously, we like companies that generate good cash, predictable cash flow. They're in a good industry structure, you know, well managed, solid positioning within that good market share. That is a lot of companies at the moment, and that's that smorgasbord mentality. But you know, we also overlay that with valuation, so we're avoiding anything that's overhyped or overvalued. Can I pinpoint one? There's plenty, basically, at the moment.
You've got to give me one.
Okay, our favourite pick at the moment is Mortgage Choice. And I'll preface it by saying we are the largest shareholder in Mortgage Choice, but we actually think the outlook for the next 5, perhaps 10 years is fantastic for the mortgage broking industry. They've been through hell and back lately with the Royal Commission. It looked like at one point mortgage broking was going to get shut down, but we think it's actually going to proliferate now. And what you've seen in overseas markets is broker share has gone up considerably in the last 10, 15, 20 years. The banks just can't sell a mortgage overseas. They can't sell one here. Mortgage Choice as a broker, we think will be a beneficiary for an expanding market share in that broker market.
Okay, and is that your top pick for 2021?
That's our top pick, but we've got plenty of others as well.
Okay.
Yeah.
I need you to come up with a stock
that
you don't own that's too expensive. Surely there's a stock on your wish list. Something you'd love to own in a sell-off.
Oh look, REA is a fantastic business. We own some in one of our strategies, but it's too expensive for us at the moment. And we're cycling out of it. We're finding broader opportunity outside of that, better relative opportunity. We think REA is a good business, but in a sell-off, you'll probably pick it up at the right price.